You're watching Famous Dave on YouTube.
And welcome back. Hopefully all of you are doing quite well. As Rick Graham would say, I'm having a absolutely fabulous day. Well, that's not totally true because as the title of this video suggests, Squarespace did get downgraded yesterday. Let's take a look. I look at news stories a lot on this Thinkorswim platform, and so I'm just going to click over here on the right under N for news story. Now, this is kind of insult to injury because if we look at the chart for the last 2 days in Squarespace, we can see that it just got hammered yesterday. And so this is going to be like a second hammering. So if I move over just slightly here, so I was pretty long all the way up those last 2 days right here. And then I kind of gave it back on this down move here, which was ugly. And then on this little rally up here to 71, I was like getting longer and longer, and then it fell back off. And so that was painful for me. I did on the close take off about half of my position. So that helps a little bit coming this morning, but still going to be an ugly day here for longs. So let's see, Evercore Downgrade. So it says, so essentially they changed the price target from 120 to 55. So that's a pretty big move. And they were, I guess, citing concerns about increased competition and the fact that the U.S. might go into a recession. So that all kind of makes intuitive sense. However, if the market continues to if the market bounces from here, then Square will bounce with it because all of these stocks are so intertwined these days. Yesterday, when the market was down, everything was down uniformly. And let's take a look at the broad markets for a second just to see what's going on here. Now, NASDAQ has a little bit of a bid in the futures, up 43, but we were down over 700 points yesterday in NASDAQ futures, and it was once again ugly. You can see the chart next to me looks similar to the chart in Square, right? Looks like Square, NASDAQ, and then E-minis. E-minis and NASDAQ looking very similar. The market is just like in lockstep. Everything's in lockstep and just selling off altogether and then rallying altogether. Yesterday, the news, of course, being that inflation is not as under control as they might have thought it was. And so we are anticipating there's a Fed meeting coming up very soon, and we're anticipating a 3/4 point rise once again, and then maybe the next meeting a 1/2 point rise. So nothing super shocking, but definitely a sell-off yesterday. But let's back things up a little bit and look at the market over a broader period of time. A lot of times when I get kind of spooked or something big happens, I just like to back out the charts and say, well, what does this look like? Not from right next to it, but from a little bit broader perspective. And you can see here this is what it looks like. We gave back the recent rally. However, we are somewhat off of these June lows, right? And the question is do we, it appears that yesterday's rally, we made higher lows. That meaning that kind of this, if you drew a line here, you could see we didn't break this low here, and thus the market, you could say that this, at least from June, it hasn't broken the uptrend. We'll see if that remains to be true or not. But the selling was ugly yesterday, and it was just, it didn't seem like there was going to be any sort of bounce. There wasn't a whole lot of sort of violence. It was just kind of like the grind. And it was frustrating. But my feeling, once again, is that in the market, in the absence of doing anything else, it rallies. And that's due to the fact that there's only so many places for people to put their money. People are earning money every week, and there's automatic investments all the time. And it takes a lot of selling to overcome that automatic investment that's happening all the time, right? And when people have money they put on the sidelines, they can only put it on the sidelines for so long until they invest it. And this reason, the market is inclined to rally at some point, right? And we've had, a pretty big period of not going straight up. And let's go to a 180-day chart, and you can see really it's been ugly since. Well, actually, let's back up even more. Let's go to a 3-year chart. And you can see this whole period here in 2022 has been basically a down move, right? Now, after June, you could say that we've we might have reversed out of it. But still, if you look at the trend here since, what is that? December of last year, it hasn't been fun, right? It hasn't been that typical market that's just slowly rallying. It's been down moves and grinding and whatnot, and which is not typical. The last few years has been, and in fact, normal market times have just been these up moves for long periods of time. You can see all of 2020 was basically an up move. All of 2021 was basically an up move. So then when you get a whole year that's a down move, it's really bucking the trend. And my strategy here is that to play for us to actually rally and take out the highs at some point moving forward here. And when we get down days like this, my bias is still to the upside, and the bias is to treat these as either dip buying opportunities or just to leave the position, and with the belief that it will come back up to where it was. And I did do some stuff right with the 401k. I had bought a basket of stocks, and I did actually sell everything out of the 401k 2 days ago before the sell-off. So that was great. Up here, I sold everything out of the 401k. So that was something right. However, my position in Square, not so much. I had a flat delta up here, but I was short, essentially short. I had that calendar that I usually have on. So I was long the back month and short the front month 75. And thus, as we move lower, my delta went from flat to longer and longer. And so I definitely got hurt with this. This was down almost $6 yesterday, and it's looking like it's going to open down significantly again today. However, we're somewhat off the lows. We did get down to 65.70. Now we're a point off the lows here in Square, which is hopeful. We'll see where we go from here. The volatility view show that I do on Options Insider Radio had its 500th episode last week, and I'm kind of bummed I wasn't able to participate in that. But I hope to appear on the show again soon. And we are rallying out of the close here. So Square only down 2 points at the moment. Now, if you looked at this stock in around 6 in the morning, it was actually up, but then it did get that downgrade, and so now it's most decidedly down. We're showing down about 3 points now. Now we'll see if this can recover from here during the session or what happens, but that's kind of where we stand right now. The VIX certainly had a pop yesterday. If we take a quick look at the term structure before I let you go here, we can see not looking terribly out of line here with the term structure. Looking relatively normal, even though we did have the sell-off yesterday. Kind of feels like we're just going to slowly grind higher here after that sell-off. If we do look once again, go back to the NASDAQ chart and back this up a little bit, we can see us trying at least to recover. We are a little off the lows here, and we're not, cruising lower. We'll see what happens, but my anticipation is we do slowly recover. Anyway, thank you for checking us out, and we'll see you in the next one. And best of luck trading today. Talk to you soon. Bye.